The opinions expressed by Karen Scott MIMS and the guests on this podcast are their own and do not reflect the opinions of this podcast platform. All statements and opinions expressed are based upon information that's considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Investments involve risks and, unless otherwise stated, are not guaranteed. Past performance cannot be used as an indicator to determine future results. Any strategies mentioned may not be suitable for everyone. Information expressed does not take into account your specific situation or objectives and is not intended as a recommendation appropriate for you. Before acting on any information mentioned, please consult with a qualified tax or investment advisor whom you have specifically retained to determine if it's suitable for your specific situation. This podcast is designed to provide accurate and authoritative information with regard to the subjects covered. Investment advisory services are offered through Brookstone Capital Management, LLC, a registered investment advisor. BCM and Harbor Point Wealth Management are independent of each other. Insurance products and services are not offered through BCM, but are offered and sold through individually licensed and appointed agents. Income regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. Insurance products and services are not offered through BCM, but are offered and sold through individually licensed and appointed agents. Income regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance products and guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone Capital Management. Most people simply ignore taxation through the 4 phases of your wealth. Instead of understanding the 3 tax buckets, you arrive at retirement with a huge 401k in the tax-deferred bucket and ignore the taxable and, most importantly, the tax-free bucket. How can the middle-class millionaire, average Joe and Jane, be so unprepared about how to protect their wealth using tax loopholes like the wealthy 1%ers do? Easy. Welcome to the Tax Smart Tax Zero podcast. This is a show about tax-free wealth. Financial advisors sell rate of return. Annuity salesmen sell what else? Annuities. And part-time tax preparers sell a 1040 to submit on April 15th. But the real goal is to implement strategic tax planning. We invite you to take the journey and explore the path to the 0% tax bracket. It's time to divorce Uncle Sam from your wealth. And now, your host, noted tax attorney and private wealth strategist, Karen Scott MIMS, Esquire.
Welcome, everyone. Thanks so much for joining us. We have an absolutely fabulous show for you today. Our show is entitled Introducing the Tax Strategist. Now, as a tax attorney, I'm going to start by making a couple of statements that I think that you understand already, but just to be safe, I'm going to repeat them anyway. So, we can definitively state that most people, especially the listeners to our show, seek to have their money transfer into wealth for the purpose of 100% financial freedom. Unfortunately, the biggest drag on wealth is undoubtedly taxes. And our tax system, better known as Title 26, the tax code, we have to say it favors businesses, investors, and particularly real estate developers. Sad but true, the W-2 employee is simply not a favored class. Now, I think we can all agree that there are 3 kinds of income: earned income, passive income, and investment income. We all agree that whether you're a W-2 employee or you're a business owner who actively participates in the business, you're going to generate earned income. Business owners, depending on what type of entity they've chosen, they file a business return. Net income from that business return is transferred onto the individual or the personal return. And in all instances, we're going to arrive at this thing called taxable income and then apply the tax rates. Now, while those things outline similarities, I have to say we cannot continue to ignore the differences. The fact that each person has their own scenario, they have their own set of facts, they have their own structure, but in developing a tax plan, which, by the way, can include a single or a multitude of tax strategies, the goal is always the same. Reduce your taxable income to the lowest amount legally possible and allowable by law. As a matter of fact, our foundation and philosophy is how to legally, ethically, and morally pay the least amount of taxes while we divorce and disinherit the IRS. Hello, everyone. Welcome to another episode of Tax Smart Tax Zero, the path to the 0% tax bracket. I am your host, Karen Scott MIMS, tax attorney, registered investment advisor, representative, accountant, estate planner, and certainly my favorite role, private wealth and tax strategist. So let's talk for a minute about a tax strategy. What is a tax strategy? So I'm going to say that that is a well-defined, thoughtful, and analytical structure of assets or income for the sole purpose of minimizing or reducing tax liability. What's the purpose of the tax strategy? Well, to ensure that whether you're an individual, an investor, or a business owner, you are paying the least amount of taxes allowable by law. And so last question, who is the tax strategist? So it's quite frankly the professional that you hire with the required amount of tax expertise whose purpose is as follows. They're going to design, construct, and implement a tax plan for maximum tax efficiency. They're going to structure the assets and the income from those assets to minimize taxation. And they're going to go beyond compliance, since the compliance is really reactive rather than proactive. So with all that being said, let me give you an example. Well, as you can imagine, last week, Sam and Susie and their next door neighbors, Average Joe and Jane, insisted that we have a meeting. In case you're not familiar with them, they're a bunch of middle-class millionaires. They've accumulated their wealth the old-fashioned way. They've worked hard, they've saved hard. But of course, the common problem that they face with the other 99% category is that they're taxed hard. And so, when I ask them a question, are you paying too much in taxes? All at the same time, they say yes. Okay? And they are particularly sensitive about that, right? In light of the revelation that with nearly 2 decades of returns now revealed, there have been, zero federal income taxes paid, with the exception of 2 years in which in each of those years, $750 was paid. Well, I can tell you, Average Joe blurted out, he's like, I paid more than $750 in federal income taxes in a week. And so they all were really pretty upset. But then Average Jane, she said, you know what, Karen? It's really simple. The system is failing us. So I sat there for a moment and I said, well, I'm going to disagree. I don't think it's that the system is failing you. I think you're failing to use the system. I think that's really the problem. And so she looked at me and she was like, what? Why do you say that? And I say, well, it seems to me that it's hard to say that the book was faulty when you never opened the book in the first place, or at the very most, you only read one chapter of that book. And that one chapter that you read was entitled 401k. It's hard to say that the book doesn't work, right? Or the system doesn't work when the only contents of that book that you have read or bothered to adhere to are the ones that are told to you from a government that, by the way, has to raise revenue, right? Based on the taxes that you pay. So I think it's kind of also hard to say that the book doesn't work or the system is failing you when, all of the chapters, all of the strategies, all of the loopholes that are contained therein to benefit you, all you do is ignore them because you hire a person who is pretty much just a historian, whose only purpose is to perform on a retroactive basis the system or the theory of compliance. So, with that being said, can I take a few moments and introduce you to tax compliance versus tax planning? And so, when we talk about the idea of tax strategies, and by the way, we have an entire webinar series that we've put together, tax strategies for small business owners, tax strategies for real estate investors, and tax strategies for retirees. And we'll talk a little bit about that later. But for now, let me say to you, Sam and Susie are age 50, as are Average Joe and Jane. They are all W-2 employees. And as W-2 employees, they kind of do the very traditional task of allocating between their earned income between household expenses and saving in their 401k. Now, despite the fact that they're W-2 employees, I have always tried to say to them, hey, you're really running My Wealth LLC, and you've got to do so in a different manner, okay? Because you've got to understand that this is about zero. This is about zero is my hero. It is about paying zero in taxation, zero in federal income tax, zero in capital gains tax, zero in estate tax, zero in excise tax, and zero in inheritance tax. And they say, yeah, Karen, we're all about that. But then my question becomes, but how do you get your financial literacy when it comes to taxation? And are you still using the compliance model? And they kind of said, well, what do you mean by the compliance model? Well, let me explain. Tax strategy is actually applying the knowledge and expertise to obtain an outcome. So I agree. TurboTax makes it easier to produce a tax return, i.e. compliance. If you're a do-it-yourselfer, right, it doesn't teach you anything. It doesn't implement any tax strategies. It doesn't teach you any tax strategies. It doesn't formulate any tax strategies. It just functions as a compliance method. It's built on the premise, and their whole business model will allow you to produce a tax return, submit it to the IRS, i.e. the compliance function, and you don't have to have any human interaction, and you do it at a lower cost. So it's built on the premise that you don't care about tax strategy. You care about tax preparation, i.e. the compliance function. But average Joe and Jane, they say, well, wait a minute. In some years, we've hired a tax preparer, right? So surely we must be doing something different. No, I don't think so. Because first of all, the tax preparer is someone you're going to meet with January through April, and you're meeting with them to do what? Once again, to turn in the compliance report, i.e. the 1040, right? So it's still tax preparation. And as a matter of fact, do you ever think it's kind of weird that after the year is over and you have no more access to try and make any changes to correct anything, that's the best period, and that's the time that you actually meet with the tax preparer? So once again, you are telling the IRS what happened last year, and you're doing it as a compliance function. So it's being reactive as opposed to being proactive. You're really just hiring, again, by hiring the tax preparer, you're really just kind of taking TurboTax to the next level by just including 2 additional factors. Well, okay, now we're going to have human interaction, and now we're going to have someone prepare the return for you. But you've never changed the purpose. It's still a compliance purpose. And it doesn't matter whether the person preparing the tax return is an enrolled agent, a graduate of the H&R Block 6-week course, or a CPA. So with that being said, Sam and Susie and Average Joe and Jane, they kind of take note. And they say, well, wait a minute. Are you saying that we're doing something wrong? And I say, no. I think what you're doing is incomplete, because Sam and Susie and Average Joe and Jane, they, for the last 30 years, they have used this method. Hey, we want to be compliant. And so they kind of are confused because they're measuring their tax efficiency by the yardstick of whether or not they've been compliant. Well, I can say to you, if I have to ask them, what's your knowledge of the tax code? I have to give them an F. If I have to say, what's your knowledge of applicability of the tax code? Once again, it's a grade F. If I ask you, have you met the goal of lower taxable income? Once again, that's a grade F. And if you've met the goal of how to reduce or eliminate taxes, once again, right, you've got to give yourselves a grade F, okay? So your claim to fame that you've been compliant, what has that gotten you, okay? Because compliance differs from being educated. Compliance differs from being wealthier. And it seems to me both Average Joe and Jane and Sam and Susie have, up until now, been the ultimate consumers of the wrong product, okay? This is not about, are you compliant? It has to do with what tax bracket you fell into, whether or not you handed in a report, 10, 12, 22, 24, 32, 35, and 37. The tax strategist, because this is about tax compliance versus tax planning, tax compliance versus tax strategy. Well, tax strategy would have done what? Again, the goal would have been to lower taxable income and then pay the least amount of taxes that you could have. Because again, what did we say? It is about how to lower taxable income, how to maximize your wealth, and minimize the taxes that you pay. The whole reason that I talk about zero is my hero, and I talk about the 0% tax bracket, because that's what tax strategy and that's what a tax strategist is all about, right? It's how do we go about having a 0% income tax, a 0% capital gains tax, a 0% excise tax, a 0% estate tax, and a 0% inheritance tax. It is all about zero is my hero. Well, when we come back for the second half of the show, we're going to talk about what needed to happen and the changes that we made because, quite frankly, had they continued on the same path, they would have paid hundreds of thousands of dollars in taxes that they didn't need to pay. And so the question becomes, how do we go about changing that? Well, I'm going to say stay tuned. Don't go anywhere. We'll be right back.
It used to be easy to create a retirement strategy. Work 40 years, save money, live off that money for a few years during retirement. Things have changed. For many retirees, reliable income is a lot harder to come by. We're living longer than ever, so that chunk of retirement money now needs to last till 85, 90, even 100. Don't go it alone. Call Karen Scott MIMS at Harbor Point Wealth Management. Harbor Point Wealth Management offers no-obligation retirement income strategy sessions. Karen's team will dig into your unique situation and, if possible, design a custom strategy to help generate the supplemental retirement income you need. Call Harbor Point Wealth Management right now to schedule your retirement income strategy session. 866-621-6660. That's 866-621-6660. Investment advisory services offered through Brookstone Capital Management, LLC, a registered investment advisor. BCM and Harbor Point Wealth Management are independent of each other.
Welcome back to the Tax Smart Tax Zero podcast. And now, your host, noted tax attorney and private wealth strategist, Karen Scott MIMS, Esquire.
Welcome back to the second half of the show. Thank you so much for joining us. Now, you know that our show for today is entitled Introducing the Tax Strategist. And you know, in the second half of the show, I like to call it Tax Liabilities and Loopholes. And we focus on how to legally, ethically, and morally divorce and disinherit the IRS from all of your wealth, but especially those partnership funds, better known as the 401k, the 403b, the 457, the TSP, or the traditional IRA. Now, why do we say legally? Because we simply want to use the tax code, which quite frankly stands in plain sight. Why ethically? Because we want to have our middle-class millionaires stop paying more than their fair share. In other words, that's the consequence and undue burden that they have because the wealthy 1% don't pay any taxes, much less their fair share. And morally, well, because Judge Learned Hand over and over again, courts have said that there is nothing sinister in so arranging one's affairs as to keep taxes as low as possible. Everybody does so, rich or poor, and all do right. For nobody owes any public duty to pay more than the law demands. Taxes are enforced exactions, not voluntary contributions. To demand more in the name of morals is mere cant. Well, there you go. Can I also take this time to say to you that, it's interesting. Our country, right, now known as the United States of America, was a plan. It was a plan because a group of people did not want to comply with the King of England. So here we are today. We're talking about the difference between tax compliance versus tax planning. We're talking about the difference between tax compliance versus tax strategies. And we're talking about the difference between tax preparer versus tax attorney. Well, my name is Karen Scott MIMS, tax attorney, registered investment advisor, representative, accountant, estate planner, and my favorite role, private wealth and tax strategist. So, in the first half of the show, I introduced you obviously to Sam and Susie and their next door neighbors, Average Joe and Jane, all middle-class millionaires who, by the way, for the last 30 years, they have been kind of focused on compliance because that's all that they knew up until now. And I have to say, they have utilized the same but utterly ridiculous standard of whether or not their tax preparer got them a refund, okay, which is nothing but you gave a loan to the IRS and didn't charge any interest for it. Okay, whatever. Number 2, they have judged their success by the, again, utterly and ridiculous standard of have they paid the smallest fee possible to the tax preparer, and then they've done so all in the manner of having a compliance function and not a tax strategy. So they have said to me that they are ready to kind of do something different. Okay, so let's talk about what we're going to do different. So if we're going to embrace the idea of tax strategy, then I should first say that we have to acknowledge Sam and Susie have decided that at age 50, they're going to work their next 15 years at their jobs. They're going to remain as W-2 employees. Average Joe and Jane, on the other hand, have decided that although they too are age 50, they're going to spend the next 15 years as business owners. So they have, in fact, this year become new business owners. Okay, so for the new business owners, then I have a couple of questions. What kind of business structure should they choose? What are the tax consequences of the structure that they will choose? And are they taking all of the deductions to which they are entitled? And are they mindful of tax brackets? Something that unfortunately it doesn't seem that the tax preparer has the time, the skill, the will, or the expertise to advise them on. On the other hand, for Sam and Susie, I too have a series of questions that I want to ask them. They, of course, are running My Wealth LLC, and so I asked them, how should they save for retirement? How should they structure their funds? What are the tax consequences of saving in that qualified employer plan, i.e. the 401k? Are they maximizing their tax deductions? Do they understand tax credits? And are they too mindful of bracket management? Well, it doesn't matter whether or not they're business owners or employees, right? As we said at the beginning of the show, the whole idea is that this is about a lower taxable income. This is about maximizing their wealth, yet minimizing their taxation. That's what we're trying to do. So in the last few minutes, let me say to you, we have two couples with two different ways of addressing how to turn their earned income into wealth. So it's not going to surprise you that, again, they decided to do two different things. Well, let me take just a short break and say that you are listening to Tax Smart Tax Zero, the path to the 0% tax bracket. I am your host, Karen Scott Mims. Thank you so much for joining us, affectionately known as your Tax ESQ. So each and every week, you know what I'm doing? I am coaching you up to and through retirement. And I'm doing so as a tax strategist, right? And I'm doing so focused not on tax compliance, but on the whole idea of tax strategy. And so if you, by the way, have some questions and realize that this is the year that you need to stop with tax compliance and go to tax strategy, my number is 866-621-6660. Again, that number is 866-621-6660. I think that this should be the year, quite frankly, that we consider having first the 15-minute complimentary tax strategy session. And then this should be the year that we focus on what? Zero is my hero. We need to focus on, again, lower taxable income, lower taxation. And I'm going to take it a step further and say that we need to focus on zero is my hero, a 0% taxation model. 0% federal income tax, 0% capital gains, 0% estate tax, 0% excise tax, and 0% inheritance tax. Well, in the last few minutes that we have left, let me tell you about what happened with Sam and Susie and Average Joe and Jane and the results. Well, Sam and Susie realized that tax compliance was simply inadequate. It really didn't meet their goals of trying to maximize wealth and minimize taxation. And so they decided to engage the tax attorney as tax strategists. And together, they designed, created, implemented, and maintained on an ongoing and continuous basis a tax plan. Okay, it saved hundreds of thousands of dollars in taxation over their lifetime. And what's more important is that it allowed them to pass their new tax-free wealth to the next generation, also free of taxation. Now, it was very different than what they had done before because now they had to spend about 50 hours a year on tax and wealth optimization. Is it worth it to save hundreds of thousands of dollars in taxations? Of course it is, right? So they spent 50 hours a year rather than 50 minutes a year on tax compliance. Well, but of course, I have to tell you, average Joe and Jane, they kind of took the complete opposite approach. Average Joe and Jane, and I know you're kind of saying, wait a minute, they were just starting out as business owners. Shouldn't they be getting more help rather than less help? Well, I would agree with you, but apparently average Joe and Jane did not see it that way. So average Joe and Jane took the complete opposite approach. Despite what I said, that unfortunately, the biggest drag on wealth is undoubtedly taxes. Despite what I said, that, we needed to have a system whereby we went from money to wealth to financial freedom. Average Joe and Jane said, nope, we're going to stick with maintaining status quo. So they did. They maintained status quo. They continued to focus and solely engage in tax compliance. Since they had decided to start a business, they hired a bookkeeper to set up and maintain the accounting system. And the bookkeeper even did the quarterly returns and, of course, the individual and the business returns after the year ended. Average Joe and Jane continued to use compliance as the standard, and they continued to pay hundreds of thousands of dollars more in taxes, more than their fair share. Well, there were a couple of groups that were holding their breath. They could now release and they could breathe a sigh of relief. Can I share with you those three groups? Well, number one, it was the federal government, right? Since they absolutely rely on the 99% remaining to, be overtaxed, because that's the way that they support the 20 trillion and counting deficit. Who else was breathing a sigh of relief now? The wealthy 1%, of course, right? Because now they can continue their pattern of escaping their fair share of taxes because, once again, they get to dump it on the other 99% and let them take up the slack. But I have to tell you, the real group that breathed a sigh of relief, well, it was the children and the grandchildren, i.e. the beneficiaries of the wealthy 1%. This group was particularly saved, right? Because for 1 minute, they were scared. They were scared that their privilege and their generational wealth could really be threatened if those darn 99% would ever wake up and put their own families ahead of the wealthy 1%ers. No worries here. That's not what average Joe and Jane did. It's interesting. There's an old saying that the best place to hide something is in a book. Apparently that's true. And what better book other than the tax code to place the sophisticated tools, techniques, and loopholes to maximize wealth and minimize taxation? The 99%, they'll never find it there. Why? Because gosh darn it, they are focused on tax compliance. They've never understood the difference between tax compliance versus tax strategy, tax compliance versus tax preparation, and most of all, tax preparer versus tax attorney. Well, with that being said, of course, you've been listening to another episode of Tax Smart Tax Zero, the path to the 0% tax bracket. Our show for today is entitled Introducing the Tax Strategist. My name, of course, is Karen Scott MIMS. I am the tax attorney serving as the tax strategist. So, in the last few minutes, I'll say to you, if this kind of hit home for you and you've decided that this is the year, especially in light of these recent events, that you want to have lower taxable income, that you want to have lower taxation, that you too want to explore the 0% tax bracket, give me a call. The number is 866-621-6660. Again, that number is 866-621-6660. We will sit down and start with a 15-minute tax strategy session. And then from there, let us show you, put together a plan, and let us show you how to go about saving hundreds of thousands of dollars in taxes and being in the 0% tax bracket. Once again, my number 866-621-6660. Thank you so much for joining us today. Barbara, if you've joined us, get back to work.
This concludes another episode of the Tax Smart Tax Zero podcast. Get ready to create tax-free wealth and start on the path to the 0% tax bracket. To receive your Tax Smart Tax Zero toolkit, you can reach us by telephone at 866-621-6660 or send an email to tax@taxsmarttaxzero.com. Want to attend our virtual seminar, Guide to Tax Minimization, Estate Planning, and Passive Real Estate Income? Send an email to seminar@taxsmarttaxzero.com and we'll register you and also keep you updated of all future virtual seminar dates and times. Don't forget to visit taxsmarttaxzero.com and on our YouTube channel. There, you can like us and subscribe to learn more about our tax study group, Zero is My Hero, or attend our upcoming webinars. Follow us on Facebook, and as always, sign up for our monthly tax newsletter and divorce Uncle Sam as the primary beneficiary of your wealth. Join us next week for another episode of Tax Smart Tax Zero, the path to the 0% tax bracket.